Welcome again. Thank you, our audience, for this, so that we can also continue with our discussion, our topic on wealth and investment on Purpose TV. Kindly subscribe to Purpose TV. Go to the YouTube channel, hit the subscription button, please, and also share this with your team, your friends, so that also they can now be able to learn much on wealth and investment. My name is Daniel K. Romaina, your finance and investment coach from a company called Pretwood Properties and Mortgages Limited. We usually have an academy called WAIM Academy. WAIM for Wealth and Investment Management Academy, where we talk about or we train on wealth and investment, mostly on financial management, business finance, development and finance, how you can now be able to structure financing, how you are supposed to package your project to qualify for financing. We also teach on various types of financing and on risk management. So if you have anything whereby you are a chama, you are a group, or you are an investment company, and you would like to learn much on finance and investment, you can talk to us. We have our numbers there, and you call us, subscribe to this channel, send your comments, call me directly through that number, and I'll be able to give you more insights on what we do on finance and investment. We also have a company called Pretwood Properties and Mortgages Limited. You can go to our website and be able to learn much on what we offer, so that we can partner with you in your investment projects. Thank you. As I had said, today we are going to talk about business finance, and mostly I'll talk much on a type of financing called equity release. An equity release is whereby you have a project or you have a business which you want to be financed, but you don't have money. So you can get, how can you use your project, or how can you use your house or any development which is in your name to get financing, so that you can finance your project or your investment. So that's what we call equity release, and that's what we are going to learn much about today. We are going to learn on what is equity release as form of financing, who qualifies for equity release financing, why equity release is the best form of financing for business working capital or for project financing. We are going to talk about what you need to package yourself so that you can qualify for equity release financing, and the documentation required for this type of financing. And also, I'm going to touch on the difference between mortgage and equity release, because most people usually confused between equity release financing and mortgage financing. So that is what is going to form our basis of discussion for today. And to start with, equity release is a form of financing which is usually given by bank or a financial institution, whereby you mortgage your house, which is registered in your name. It can be on your personal name or be on your corporate name, that is in your company's name. We can mortgage that house or that land and get money to fund your project. Let's say your house is maybe 25 million Kenya shillings. You can be able now to take this house to the bank and maybe get maybe 70% of the loan or the value of this as a loan. We usually call it loan to value ratio, and then use this money to fund your business. So this is what is called equity release. So it's a long-term loan. It goes between 10 to 15 years, depending on how your business is. And the loan to value ratio or the discounting is between 70% to 90% of the value of your property. The other thing is that your title is supposed to be registered in your name. So that project, that house needs to have a title which is registered in your name. If the title is not, if your house doesn't have a title, that one we cannot be able to use because we have to charge. And for us to charge, it must have a title. It can be an absolute title, whereby it's a freehold title, or it can be a certificate of lease. So any of the two can be applied. Then the other thing is that actually there must be a learning business. Either there must be a venture, you can, maybe you are a developer, you are doing another project somewhere, and you have another project which already is complete, and it is giving you rent, or you have another business which can now be able to repay the loan. So we can take that project, charge. You can take that house or that building, charge, give you money to develop another project. So if you are a developer, you should not worry. We can now be able now to use another project, charge that title, and give you money to complete whatever you are doing. If you are in business, you have a home, you have a house, or you have a commercial building which gives you rent, we can be able to charge that property, give you money, so that now you can use that money to expand your business. So that is what is called equity release. The other thing which you need to understand is that for you to qualify for every form of lending, you need to have your CRB records clean. That is now the Credit Reference Bureau. You should not be having any loan which has not been repaid or which is in default. Maybe you can, that doesn't mean that, yeah, you can be having a loan which may be at a point you defaulted, but now you are repaying. So that doesn't have a problem. You can have that kind of an, we understand. Businesses, sometimes they can go up and go down. So if your business was not doing well at a point, and then your CRB records was damaged somehow, that should not be a worry to you. As long as now you have started repaying the loan, you can come to us and we shall now be able to advise you on what to do. So in a nutshell, that is what the equity release is all about. Then who qualifies for this form of financing? Anyone can qualify for this form of financing. Either you are a developer, if you are a developer, or you are a business person, you have a business, and this, I mean, a learning business. You need to have a business which has been there for at least 1 year, so that now we can now be able to see the trend. Or you are an entrepreneur. You have a, there's a business, there's a difference between a trader and an entrepreneur. An entrepreneur is someone who is enterprising. You are an entrepreneur. You want to start a project. You want to start a venture. You don't have money, but you have a rental income somewhere. You can mortgage that project, get money, and use the rent proceeds from that business to from the rent proceeds, and then to repay the loan, and then get this money, do whatever kind of a venture you wanted to do. Then the other one is if you are an importer or an exporter, especially for those people who are in agribusiness. We have exporters in agribusiness, or we have exporters who are or importers for real estate business. So also those also qualifies for equity release. Or you are a contractor. Maybe you are a contractor somewhere. You have been given a project, or you have been given a load to develop, to construct, but you don't have money. You should not worry. As long as you have a business, a building which you can also be able to mortgage, or you have a land somewhere which you can now be able to mortgage, to charge, get money to develop, to do whatever kind of business, or to undertake the construction. So if you are any of this, you are a developer, you have a business which is running which is there for maybe 1 year. You are in the agribusiness. You are an exporter. You also an importer, especially for those who are in real estate business. We have importers who import roofing tiles, and also roofing or any tiles or any kind of import which you are doing in real estate business or contractor, you can qualify for equity release financing. The other thing is that why is it the best form of financing? Number one, there's a collateral. You know, whenever there's a collateral and you are doing any lending, the risk margin goes down. As long as there is a collateral, the risk margin of for the whole venture goes down. So the degree or the certainty of you getting this money is a bit higher than when you didn't have a collateral. So equity release is the best form of financing because number one, it is a collateralized lending. Then the other thing is that the amount of the loan is matched with the value of the development. So even you as a developer or you as the person who is, as the applicant, you know that in case of anything, there's this loan will not expose you in debts. And we have been having issues whereby you find that someone took a loan and maybe the business didn't do as it was supposed to do. There was, especially during the COVID, most of the people who took loans were not able to pay as it was anticipated. So in that kind of a scenario, if it was an equity release, you had mortgaged your house or your land, you can now come to me and I can be able now to restretch or restructure your loan so that the inflow, the amount you are expected to repay can be accommodated by the loan. This happens whereby like now you took a loan whereby you are supposed to pay within a period of like 3 years or 5 years. And you used the best case scenario. But when it came down to the start of the repayment, you find that you cannot be able to repay within that, the inflows cannot be able to accommodate the amount of which you are supposed to pay. So in that kind of a scenario, what we usually do, we restructure the loan. We structure and give you a longer period of loan repayment, which now becomes accommodated using the inflows. And that has enabled most people who has been having issues with default. And you know the problem with default, it can make your house to be sold. So, but when you restructure, it makes now your stress in a kuondokea and you are able now to repay the loan without any stress. So that is another advantage of the equity release form of financing. The other one is that you can imagine you are a trader or you are business, you have your business which is giving you rent, and you have a project which is giving you rental income. You can charge that project, that house or that project, that development, get money and be able to service that loan using the rental proceeds. So by so doing, it makes you easy because the rent which is coming from that rental building goes towards the loan repayment. So it gives you a free, it relieves you the pain or the stress of the loan repayment so that the business can be able to run without any issues. And by the way, for those who have rental income, you can use that rental income to repay the loan so that you get this money and do other businesses. So it is easy. So the moment, if you are there, you have a rental income and you want to start a business, please use the rental income, use that as the collateral and get money for you to do the business. You can look for me and I will be able to arrange a very good, to package you and be able to get a very good financing for your development or for your business. The other thing with the equity release is that it gives business expansion. Like now, let's say you have a hospital and you have run your hospital for maybe some period and you have gotten another opportunity either to expand your hospital or to open another wing. Maybe you want to expand, you want to open a maternity wing. You can now use you can charge the building, either your house or any land, as long as it's not a community land. And by this I mean for those, if it's a land in a country which is a community land or it's an agricultural land, for those ones we don't touch because those are usually called community land. So that one we don't touch. But if it's a land within the metropolitan area, that can be used as a collateral. If it's a building which is now here, in a metropolitan area, it is in Nairobi, Mombasa, Kisumu, Nakuru, Nyeri, within a metropolis, they can be charged and then get the financing to expand your business. So you don't have to worry for your business expansion. Let's now look at the documents which you require to have for you to qualify for this form of financing. Number one, you need to have something called business registration documents. Your business registration documents. If it is a business, you need to have a business certificate. If it's a company, you need to have a certificate of incorporation. You need to have memorandum and articles. Currently, we are not having those big memorandum and articles. We are having a document called CR2. You need now we need to know to see who are the directors of the company by a document we call now CR12. So once you have those documents, it becomes easy. As long as we usually call KYC, know your customer. You need to know who are you dealing with, the entity. It needs to be registered so that one can now be able to know the kind of business you are doing. Then the other one, you need to have a confirmed source of income. We need to see your cash flow. You come to me, I'll now be able now to tell you, this is how we are going to package you. Maybe you are in business, you have been putting your money on M-Pesa, or you have been putting your money in a bank. With your 12 months bank statement, I can now be able to know how your business is faring. And by so doing, I will be able now to advise you how we are going to package your financing. The other thing is that you need also we also need to see you need to have your ID. The other document is your PIN. And then we also need to know where are you taking this money. It is usually a requirement by the Central Bank of Kenya. We call on something called 40-40 recommendation. 40-40 recommendation, whereby we need to know where this money is being paid. You are taking maybe if you want to expand your business, you tell us, yes, I want this money to expand my business, so that this is a requirement, so that this money is not used or utilized towards financing terrorism or doing something which contravenes the policy. Then the other thing is that we need to value your property. We shall do a valuation of your property. If it's a building, we come and ascertain the value through an accredited valuer, which will give us now the actual value of your house or the property which you want to charge. The other thing, as I had said before, is your CRB records. I don't want to say that you need to have clean CRB records. What I'm saying is that your CRB, if you had a loan, we need to see that this loan is being repaid. We have issues whereby someone took a loan. After some time, he defaulted the loan. Maybe he was in employment, and because of issues, maybe he was fired, or someone was in a business and the business collapsed. So you find maybe 1 or 2 years the loan was not repaid. But as long as you have started now repaying your loan, you have gone back to your business is now repaying the loan, or you are back in employment, you can qualify for this product. The issue, so it's a, financing, how we usually do our financing, it's on a merit basis. We are able now to review a case-by-case basis. So as long as you have your business registered, we can now be able to see your bank statements to ascertain your cash flows, and also there's a collateral, then you can qualify for equity release. The other thing is that your business needs to be there. We can now be able to see the kind of business which you are doing. What's the difference between equity release and the mortgage financing. Equity release is whereby you mortgage your existing house or land to get financing to finance your other investment. Mortgage financing is whereby you get financing so that you can buy a property. If I structure for you a financing for you to buy your house, to buy a land, that is what is called mortgage financing. But if you use the existing property which you have to buy another land or to expand your business or for any investment undertaking, that is equity release. So in a nutshell, that's equity release. I know that there's something which you have learned from this topic on equity release, and I know from now you will have confidence to undertake your project. Come call me through those numbers. I'll be able now to structure for you financing. So it should not be a worry. You want to develop, you want to get financing, you are a contractor, you are a developer, you are in business, don't worry. As long as you come to us, we shall now be able to package for you something which will suit your business. The other thing is that through WAIM Academy, we usually give personalized coaching, or it's your team or your group of your chama or a group, or it's a corporate and you want to learn much on wealth and investment, please let us know and we shall now be able to assist you. The other thing, give us your comments, give us your feedback so that now we can know the areas which you are going to touch or to train on to ensure that you get something, you learn. The issue of Purpose TV is to ensure that you learn something. We inspire to aspire. We want you to learn and to increase your wealth. We want to have testimonies of people who are now doing real businesses. Thank you, thank you, thank you. Until we meet again, my name is Daniel Keiromaina. I'm your finance expert. Thank you.